Hey everybody, Andy here with Twisted Finances, and in today's video, I will be explaining what dividends are and how they work. I'm also going to give you a few tips and tricks so you can fully understand the power of dividends. So be sure to stick around for the entire video so you can use all of this knowledge to your own advantage. In the world of finance, there are so many important topics that we can cover: value, shares, income, markets, companies, economies, investments. But there's one thing called a dividend that is so powerful and one of the most powerful investment vehicles on the market. And when you learn exactly how to use dividends, you can achieve anything you want. So the basic definition of a dividend is just a distribution of the income from a company to its shareholders. Dividends are commonly paid out in dollars, but they may also be paid out with additional stock of the company, which is referred to as a stock dividend. So basically, dividends are the awards for investing in a company, but not every single company out there decides to pay dividends. A lot of companies decide to retain those earnings and reinvest it back into the company for more exponential growth and better research and development, product development, etc. So now we know the basic definition of dividends, and now you might be wondering, how often do these companies pay dividends? Well, it really all depends on what the company and what the board of directors decide the frequency of dividends, but typically you can have a selection of either a monthly dividend, a quarterly dividend, or even an annual dividend. Companies also have the option to elect for something called a special dividend, and this is a non-recurring dividend, and it's usually a result of a strong quarter or a strong year with high hopes on the future of the company to incentivize more investors. But when you're trying to compare dividend stocks, you really don't want to compare whether they pay monthly or quarterly. You want to look at the dividend ratio. The dividend ratio is a really easy ratio to calculate. All you have to do is divide the total annual dividend of the company, divide that by the company's share price. So for an example, if a company pays a 10-cent monthly dividend, then their annual dividend is $1.20. So if their stock price is $120 per share, then their dividend ratio is only 1%, which is pretty low. The dividend ratio really helps us put things into perspective so we can compare monthly paying dividend companies, quarterly paying dividend companies, and annual paying dividend companies. So if there was a company out there that paid a $3 annual dividend and their share price was $120 per share, then they have a 4% dividend ratio, therefore a better dividend paying stock than the previous example. And looking at percentages isn't only applicable for dividends, it's actually a really strong way you can compare most things in finance. Don't get caught up with the absolute dollar value, switch things into percentages because it's going to help you compare apples and oranges. So now you know what dividends are and the different types of frequencies that dividends are paid. So what type of companies pay these dividends? Typically, the dividend paying companies are the cash cows of the world, where the net income is set on almost autopilot. You think of Walmart, you think of Microsoft, those companies are so established and they've really put themselves on top in their industry. So they don't really need to retain any of the money they earn, putting them in a better position to pay out their income through dividends. And when you're trying to research and look at different dividend companies, there's two big categories of dividend paying companies that a lot of dividend investors kind of specialize in. And that is either dividend kings or dividend aristocrats. Dividend kings are companies that have paid and raised their dividend year over year for at least 50 years straight. And dividend aristocrats are companies that have paid and raised their dividends year over year for at least 25 years. Most of these companies are going to be in the sector of utilities, financial services, healthcare, consumer products, and industrial type companies. I won't go into exact details on which specific companies or which specific stocks are what, but I will link a super awesome spreadsheet down in the description that lists all companies in different type of dividend categories that will show you the sector that they're in and their dividend ratio, and it's completely free and it's awesome. It's what I use for my own personal investing. And you can also just Google top 10, top 25 dividend kings or dividend aristocrats stocks, and you can kind of get a pretty solid recommendation on what to look out for. Hey, real quick, thank you so much for watching this video. I really do appreciate you. If you're enjoying the content and it has provided some type of value for you, I'd really appreciate it if you smack that like button, and also consider subscribing. We put out weekly finance content to help increase the financial literacy of the population, but I really do appreciate you watching this video. Thank you so much. Now let's get back to it. So you might be asking yourself right now, why do companies decide to pay dividends? why don't they just make the money and then keep it and then reinvest it? And why do they pay investors? There are a few reasons that I can think of off the top of my head why these companies decide to pay dividends. The first reason is kind of what I touched on before, the fact that they're cash flows, and it really serves no purpose to the company to just hold a massive amount of cash since they're not reinvesting and doing research and development to increase their product. So it makes more sense to put money back into the investor's pocket so that they can develop more investors and increase their market sentiment. It's basically a tried and true method of gaining the trust of investors. Another reason why, which kind of ties into the cash cow, but it's a little different, is the fact that these companies are ancient, right? They've been around decades, and the people that have invested in these companies have been investing in them for decades. So they're 60, 70 years old. So if they decide to cut the dividend or stop paying the dividend, they're going to piss off a lot of long-term investors, and you do not want to do that. And the last reason that I can think of is a short-term strategy. The company wants to increase their stock price in the short term. On average, when a company declares a dividend, the stock price will increase by the declared dividend amount before the dividend is paid. So if a company's share price is $60 and they declare a $2 dividend, then it's realistic to expect the stock price of that company to go up to $62. However, a little bit before they actually pay the dividend, the stock price will go back down to $60. So it really isn't a strategy used too often, but it may be in terms of creating arbitrage, but that's teetering on unethical. But hey, you gotta make a buck somewhere, right? So now you know a lot about the ins and the outs of dividends, and you may be asking yourself or thinking about, is dividend investing right for me? And this answer is going to come up a lot, and it's the answer to a lot of financial questions, and the answer is it depends. Are you a young investor that isn't scared of losing their money because they understand that you have 40, 50, 60 working years ahead of you, and maybe dividend stocks are a little too safe for you and you want to try your hand at more risky investments for more return on your money? But if you're more of an older investor and you might be 10 to 20 years out from retiring and you really don't want to risk your nest egg, then dividend stocks may be something for you because it has less risk and it creates a solid cash flow if you have a solid size nest egg. For me personally, I'm a very boring investor, right? I study Warren Buffett and I really try to do everything that he talks about and teaches. So I love dividend stocks. Most dividend paying companies are companies that have products or services that people love and people will always buy. So when you buy these stocks, you're buying immediate value. I'm also a strong believer in cash flow. I believe that every single asset should generate some type of cash flow, or it's not necessarily classifiable as an asset. And I know because, I'm not even 30 years old and I'm a dividend investor. And then in the beginning, I talk about maybe it's better for older investors. That's where it all depends. Dividend investing is right for me because it's what I enjoy doing. It's what I like seeing on my portfolio, and it's what's treated me well. Just because it's right for me doesn't mean it's right for you. The only thing I can do is give you tips, tricks, and knowledge to help educate you on your subject so that you can do your own research and find out what is best for you. But thank you so much for watching this video, man. I really appreciate it. If you are thinking about starting your investing journey, then I got some bad news for you. The best time to start investing was yesterday, but it's okay. You can start today. Check out the description. There's some links in there for some free crypto, some stocks, some money to help kickstart your investing journey. If you enjoyed the video and it provided some value to you, please smack that like button right on the ass. If you want to subscribe, that'll be awesome. We make weekly financial content to help increase the financial literacy of the population so that you know exactly what to do with your money. But other than that, I hope you have an amazing day and I'll catch you next time.